Hello, everybody, and happy Thursday. Jumping on a couple minutes late today because of technical difficulties. Also, I got a feeling that Astro is probably going to fuss because the landscapers are here. So you know what? If the wheels fall off the bus today, they fall off the bus today. I'm doing the best I can. Okay, so today's topic, we're going to be talking about what do mortgage rates being at historic low really mean for buyers right now? So yes, we have been going through a pandemic, and a lot of people predicted that when the pandemic hit, that it was going to kill our real estate market. And it's actually kind of been the opposite. So yes, when the pandemic first hit, we were seeing a lot of listings being pulled. Some buyers that were really interested, they kind of pumped the brakes a little bit just to see what was going to happen. But then things really started to tick back up. We actually, for the month of June, I told you Astro was going to fuss. So for the month of June, we were actually up 0.5% in home sales from June of 2019. So a lot of those contracts started happening. I know, he's going fast. So a lot of those contracts were written in May. So it showed like buyers started getting more confident. So today we're going to be talking about what do mortgage rates being at historic lows mean? How does this impact buying, especially if you're considering being a first-time home buyer? This is going to be some really good information for you. So when we say that mortgage rates are at historic lows, what does that even mean? So let's take a look back at mortgage rates by decades, and it'll kind of help to put things more in perspective, right? So in the 1970s, the average interest rate was 8.86%. In the 1980s, it was 12.7%. In the 90s, it was 8.12%. In the early 2000s, it was 6.29%. And in the last decade, it's been about 4.09%. So as you can see, we are coming down. And then as of last month, the average rate was 3.21%. So yes, they are at historic lows. I've even seen some banana numbers like high 2.9, like it's kind of crazy. So how does this affect your purchasing power? Well, the lower the rates go, the more you're able to afford to buy. So I figured the best way to kind of make this make sense is to actually do a little bit of math today. So I went ahead and I put together my handy dandy board. I've brought it back. So we're going to take a look at what all of this means. Okay. So for this exercise, let's say you're buying a house at $350,000 this year. You're putting 5% down because I know that a lot of people think you have to have 20% down, but that is not the standard anymore. You're getting between 3.5 and 5%. So you're putting 5% down and your average interest rate is 3.21%. So when you break all of that down, so this is going to be your monthly mortgage. This does not include taxes or homeowners insurance, but it would come out to be $1,439.78. So again, that doesn't include, let's see, can you see? So that doesn't include, again, taxes and mortgage and or homeowners insurance, whatever. Trying to like navigate Astro and everything. Okay. So, but then say that you're like, well, I just don't know. Should I buy? Should I not buy? I don't know. Like it's scary because I get it. Can be really scary. It's a ton of money. So say you wait and the rate jumps up by just 1% by the time that you feel like you're ready to buy. Okay, so let's use the exact same numbers, right? So let's say you want a $350,000 home. Again, you're going to do the 5% down, but this time the interest rate is at 4.21%. So that means that your monthly payment, again, without taxes and homeowners insurance, is going to come out to $1,627.93. So just that increase of 1% makes the difference here of about $188. And so, like, I mean, you know, that for some people, that 188, they're just like, I don't care, I'll go with it. But at the end of the day, that could be money that can go towards your electricity. Ultimately, take that 188, right? let's look at how much more you'd be spending over a year, right? So that $188 times 12 months, that's going to cost you an extra $2,256 a year. Now, say you have a 30-year mortgage, times that by 30. So you're going to end up spending over the life of the loan an extra $67,680. So again, if you are a financial person and hearing these numbers make sense to you, right? Like that is a massive amount of money. And so again, I get that a lot of people want to say, I'm not ready. I want to save more or whatever it may be. Ultimately, at the end of the day, if you wait and rates continue to start to tick back up, it's going to impact your monthly payment. It's going to impact the amount of money that you're paying over the life of the loan. It's going to impact what you're paying over each year. Really and truly, when interest rates are this low, you do want to jump. Now, again, I know that especially here in Nashville in general, we are seeing it's a seller's market. Homes that are priced right and marketed right are flying under contract in 24 hours, 48 hours, like they are moving multiple offers. So buyers, that can really deter buyers, and buyers can be like, I don't know. I don't want to have to deal with bidding wars. But at the end of the day, like if you have an agent who knows how to win bidding wars, you can still get the home of your dream, lock in a great interest rate, and ultimately save yourself money. So again, this makes sense. Now, if you think about let's think back to the 1980s, right? Let's look at that same scenario. If you break it down by the interest rate from the 1980s, that takes your mortgage payment up to $3,600 a month. So we're talking about the interest rates make a big difference in the financial piece of buying a home overall. So let's kind of just recap it. Ultimately, the lower the interest rates, the more you're going to be able to afford. If you're trying to look at what your monthly mortgage is going to be and the interest rates tick up, that means that ultimately that top end of your budget is going to get a little smaller in order to keep that monthly mortgage in check. So, and again, if you are thinking about buying, if you've ever wondered about it, if you want to know if you even qualify to be able to buy, always feel free to shoot me a message, email me, DM me, whatever you need to do. I am happy to connect you with lenders who are awesome at getting you pre-approved. You may not even want to reach that top end of your budget, and that's okay. What we'll do is we'll figure out, okay, where do you want to stay? All right, and based on that, here's where we need to stay at or under. And again, we are in a seller's market, but please do not let that deter you. You do not want to miss out on locking in low interest rates because, again, ultimately it's going to affect your bottom line. And, the lower the interest rate, the more money you can keep in your pocket or put towards something else that you want to do or save. So I hope this was helpful. Again, if you ever need anything, please don't hesitate to reach out to me. I will be back next Thursday, and I hope that everyone has a fabulous weekend.